Good evening, traders. It is Christmas Eve, Saturday. And although I said yesterday I would not do another video, I had to get this out for you guys, for those of you who want to chew on something and do your homework before the Tuesday session opens up. There are two fundamental questions that we all want to know. How long, in terms of days, will this fake rally last next week? And will we go lower or stay about the same level after the fake rally? Right? Those are two huge questions we all want to know. And I'm going to give you guys a framework of how to answer those two questions. Okay? I'm going to tackle the first question, and I'm going to give you the net, and then I'm going to back up and give you some details. The net is on how long will this rally last. It depends on whether it is what I call a pop and float on the MACD, of course, or a pop and fall on the MACD. Okay, now what in the world am I talking about? Okay, this is the 1 hour chart. This actually goes back to September. Remember, September 13th, CPI, this past fall. What happened was a pop and float. And that went on for how many days? 1, 2, 3, 4, 5. 5 days before they finally cut the tape. Okay? And what is a pop and float? On the 1 hour chart right here, it pops up, but it doesn't immediately come back down to the zero line. It floats. And more specifically, while it's floating up there, the MACD continuously crosses back over the signal line, like this, like you're seeing up here, coming back down and crossing back over. That's a key distinction, that it's above the zero line, and the MACD, while it's still up there, has come down, but crossed back over the green signal line while up there. That is a key difference between a pop and float that can go several days and a pop and fall. Now check this out. See, a pop and fall, it pops up, but it just basically just rockets back down to the zero line. In this case, it does come up and crosses the signal line again, but it's so close to the zero line, I would consider this a fall. Okay, not a float. This is a great example of a float. And we're going to get into some more examples of that, going back to like even the August peak, okay? Yeah, I have some more pop and floats like this one, but this is a little bit out of view. But this is a good example. See that? Right there. Oh, this is August 12th. Yeah, we'll get to that. We'll get to more of that. But this is another good example of a pop and float. See that? Keeps crossing back over the signal line, coming back down, crossing back over the signal line, all the while staying above the zero line. That is a key distinction. Whereas a pop and fall, you could expect it to pretty much go back down to zero line, pretty much like this one did overall. See that? It crossed back down to zero line. It's a pop and fall. I would expect a pop and fall to be only just, a couple days. But so it depends on the size of the surge up, too. The larger the size of the surge up, the more days it'll take to go down slowly. Okay? So that is the net. It's either look for a pop on the 1 hour chart, look for a pop and float, or a pop and fall. Pop and float must be above the zero line and must cross the signal line. That's the net. Pop and fall, it's not going to cross the signal line. It's pretty much going to dart right back down to the zero line and basically kind of reset itself. Okay? So, there you have it. Okay, that's the net. Now, we're going to get into some more details of that right now. Okay, so left side 4 hour chart, right side 1 hour chart. SPY futures on both sides. Okay? For you newer viewers, I'll just call attention to we have been in this trading range, this horizontal range up here, since effectively 11/10 CPI. When CPI came out and we rocketed up that day, we have been in this trading range, horizontal range. But actually, overall, we have been in an ascending channel. See, here's the top of the channel, and here's the lower part of the channel. And guess what? We're right back there again, okay? This is for you newer viewers. You existing viewers, you already know what I'm talking about. We've been talking about this the whole time. Now, for you newer viewers, the significance of the weekly EMA 50, this red line up here, and the weekly SMA 20, this gray line right there, has been significant because in all of 2022, the markets have failed to capture it, hands down. And now we are below both of them, right? We're right there. We are below both of them. But for a whole solid month, we were trading in this range and kissing the top of the channels. Here, 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 and here. Okay? So that's kind of to bring you guys current. Okay? Now, let's start with the 4-hour, on the 4-hour side on the left here. See this blue star? I wrote down similar 2023, similar to Friday, because this is 2020. This is Friday, right? It has a similar setup. Look at this, 4-hour up, down, close to the zero line, and then boom. Okay? Up, down. Now it's flattening and curling up close to the zero line. Okay? It has a similar configuration. Now, what I don't know is how high this is going to go. I don't know. Okay? Is it going to be higher than these previous peaks right here? I don't know. Okay? Now, but what I can say is if it is higher than these previous peaks, if it ends up being a blow off top, it makes a higher high, because as you see here, we're making lower highs here, lower high here, lower high here. Okay? But if it makes a higher high on the 4-hour chart than these previous peaks, then the question becomes, where does it land? Which one of these, I drew out these X's, here, 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 or here, right? As you've seen here, every time it's launched in the last 1.5 months, it's ended up lower than the last, ended up lower than the last, ended up lower than the last. Where will this one land? That's the question. That's the key. If on the 4-hour chart this lands above the zero line, oh, that's really bullish. Okay? In other words, if it lands above and then starts to pivot back up, that's what I'm talking about when I say landing. It's got to pivot back up, not keep falling. Okay? If it lands above the zero line, this first X, that's really bullish. Even if it lands in the second X, that's still neutral. We're not going to go lower. That's what that means. Okay? Because you basically landed where you took off. Okay? That means when we conclude, there will be a conclusion one way or another, guys. There will be a conclusion one way or another to this 4-hour rise, MACD rise, and fall. Where does it fall? Where does it land? So if it lands on the second X, that's still neutral bullish. If it lands on the third X down here, that is still possible to trend sideways. Because right here, look at this third X. Like here in this example right here. See that? That's December 7th. Let's go straight up. Ah, see? You're still going sideways. You didn't fall out of the channel. Right? Right here. You're not out of the channel. So because you're the 4-hour bearish signal is -35, this bottom red line. If you don't get to that -35 line, you're not bearish, as is proven right here. See that? You're not out of the channel yet. But as soon as what happened? You got down to -35. Let's go straight up. What happened? Oop, you fell out. You're out. You're out. Okay? So that's the question. I don't know. but I'm just telling you guys what to look for on the 4-hour MACD. After this bad boy lands, which X does it land on? And that will tell you the answer of whether it's still bullish, whether it's neutral bullish, whether it's neutral or bearish. Okay? That basically answers that question. After the rally, are we going down or are we going sideways? Right? There's only two options. Or up, right? Depends on which X, again, which X does it land on, okay? So that's the 4-hour chart for today's date, okay? This goes all the way back to 1013 CPI. 1013 CPI, here's that wick low that proved to be the bottom of this big old channel that we have been playing around in, you know, for a good week and a half now or so. See, we've been, you existing viewers, you guys know we've been tracking to this channel. We've been tracking to this, and it's been honoring it. It's come through it, come back up, fell back through it, come back up. See, so it's scheming something. It's scheming something. Okay. Now on the right hand side, 1-hour chart. Now, okay, see this? Okay, here we go. Earlier I was talking about pop and float, pop and fall. That applies to only the 1-hour chart. Doesn't really apply to the 4-hour chart. The 4-hour chart's too smooth. See that? These lines are too smooth. You can't figure out floats and falls like that, right? It's just, on the 4-hour chart, I just basically look at takeoff and landing. Is it higher or lower, right? That's basically what I look for. Takeoff and landing on the 4-hour chart. The 1-hour chart gives you more, let's go ahead and zoom on in a little bit. It gives you more granularity. Pop and floats. Here's a pop and float. Boom. Coming down. Come back up, crossing the signal line while staying above the 0 line. That's pop and float. What did it look like up here? See that? Pop and floats give you, it looks like they're making higher highs, higher highs, higher highs. And pop and floats tend to give you higher lows also, because you're still floating. You're slowly floating, and you're going to end up somewhere near the 0 line. You're not going to keep falling too far. Okay? But look, here's an example. I call this more of a pop and fall. It just came up and almost got to the 0 line before it probably decided to do one more surge, only to keep falling down. See what I mean? Pop and floats, I would expect you to probably about, let's just call it, the worst you need to be going down is at about a 50% retracement. 50% retracement from bottom to top. This is about 50% before you need to make the next pivot up to consider that a float. Okay? A float and not a fall. Whereas this guy, well, you could, we just use your judgment. Like, clearly this one, came up and then just went straight back down. It's not floating around. So let's see what happens. Yeah, see? Let's go straight up, 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 up. Boop, boop, and then just boom. Steep drop off. Okay? It wasn't many days, right? This is many days, actually. 1, 2, 3, 4. Yeah, that's 5 days. That's a week. Okay? So, here's a classic pop and fall. Boom, and then boom, straight down too. Okay? Right? So, and then not only that, I mean, you basically came back down and retraced 100% total. And let's see what happened with this one. Ah, this was the 1110. Yeah. Whew. I mean, it gave it its, wow. Yeah, it gave it, I remember this. It gave it a couple days of additional thrust. But clearly, you're in a pop and fall scenario. And what happened was it gave its final thrust on 11:15, and then it just fell for like how many days? Let me see here. 1, 2, 3, 4. Yeah, 5 days of just falling and sideways chop. See what I mean? Like you got 5 days of no productivity out of it. Like you got 5 days of like consolidation, like a week of consolidation. See how much time you would have lost? So in that case, if it's a pop and fall, whew, clearly this initial move up is way bigger than this one. You can almost guarantee that's going to be a pop and fall when it's that big of a move, right? When it's that tall, too far, too fast. It's just gonna, that's not gonna float, right? Actually, all of these since 11/10 for the month of November and December have all been pop and falls. There have been no pop and floats. No pop and floats. Except for this one. When was this? Let's have a look. This is a pop and float. Pop, kind of float, come up, and then come down. Let's see what happened here. Up, 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 up for a couple days, and then kind of come down. Okay. Oh, that was Thanksgiving. Yeah, that was Thanksgiving. Oh, yeah, I remember that. There wasn't too much action there. Okay. So if you notice, all of these are just pop and falls, and boy, were they. I mean, huge up and then big down. Huge up and then big down. See what I mean? So just be on the lookout for that. What to look out for. Now, same deal on the 1 hour. When we take off, starting next week, where does it come down? I want to point out something to you guys. Similar to 1223. This is 1223. So, comes up, make one notch, two notch, and then does it take off? See what I mean? Here's one notch, two notch, take off. Now, I want you guys to notice something. So notice that this is making lower lows. Here it's coming down, down here. But then this made a higher low to stop it. See that here? Like that. See that? Clearly. Lower low, higher low. That's the notch. Higher low, explosion, pop, and then you stayed in a range. Right here. See that? Because the lows never got below the negative 20 line on the 1 hour chart. Right? It always stayed above it, always stayed above it, always stayed above it. Even here, but it came and stayed above it. So what happened above is, that's how it stayed in that range. It stayed in that range. You didn't fall. Because the MACD on the 1 hour never got below the negative 20 line. Right? Clearly, it's clear as day. So, that's what to look out for. When the 1 hour takes off on Tuesday, and when it eventually comes down, where does it stop? Same question I asked on the 4 hour chart. Here? Oh, that's really bullish. Here, that's still neutral bullish. Down here, that's bearish. Down here, that's like, we're going down. Okay? So the same question that I asked on the 4 hour chart is on the 1 hour chart. Where does the 1 hour land? That's what I don't know. But that's what I'm telling you guys. That's what to look for. Okay? I don't know where it's going to go. But what I'm saying is, notice the lower low, until it comes up and makes a higher low, and then it stays in a range. What I'm saying is, notice the lower low, comes up and makes a higher low, and depending on where this one lands, is it going to stay in a range like this? See what I'm saying? I'm asking the question. I'm not suggesting it's going to do that. I'm just asking the question so you guys can be looking out for this. Look out for this pattern. If you see this pattern, then it's going to do this. That's what I'm saying. If this 1 hour, when this 1 hour comes down, well, which it will, 100%, wherever it lands will tell you whether it's going to be in a flat, in a channel, right, just more horizontal, or whether we're going to go lower, or whether we're going to go higher, right? If it lands up here, I mean, that's crazy bullish. Okay? You know, mind you, we haven't even seen that at all since October. So I doubt it. I doubt it's going to land up here. I doubt it. It's going to be between here and here. This X and this X, right? That's what I think it's going to do. Okay, so hope that makes sense to you guys. Let's go back to, okay, this is the 4 hour chart between August, right here. Here's, oh, my cursor's kind of getting a little laggish. August through October 13th low. Remember that? So this is the August peak all the way down to October 13th. Okay, let's check out the 4-hour chart. This here on the September CPI looks very similar to today. Very similar to today. Do I have today's up? Okay, I do not. But you have a higher low gearing up to about to surge. But once again, the question on the 4-hour chart is, where does that 4-hour eventually land? That kind of depends on how high it originally goes. If it, like in this case, it went way too high, and then it came right back down. And see that? It hit that negative 35 line right here, and guess where we went? we went lower. We kept going lower. Okay. Now I want to call you guys attention to something. This is the same weekly EMA and weekly SMA that you saw earlier. Look how that perfectly lines up with these levels up here too. Back in August, guys. All I'm saying is these market maker SOBs were already carving out these patterns, already carving out the patterns, guys, before the patterns were even formed. They already carved them out. That's all I'm trying to say there. Okay? Like, see this? See this here? This is it. We haven't even bottomed yet, guys. This is the top of the channel, by the way, that you saw earlier. That's the top of the channel. Okay? Now, so August through October, very similar to today. Very similar. Making a higher low notch, and then it's about ready to take off. Making a higher low notch, it's about to take off. Okay? So I'm just pointing those things out. Earlier, actually, I covered this very thing on the very first slide. Pop and float. This is the same slide. Pop and float, pop and fall. Okay? Remember the criteria. The MACD red line needs to cross the signal line again while being above 0. If you get that scenario, that's a pop and float, and that means the rally is going to go on for several days. It's not just a one-day wonder. Okay? That's what to look out for. So that's basically all I want to show you about that. Let's go all the way to, this is from left-hand side, 4-hour chart, July through August. July through August, okay? I wanted to point out, here's the 4-hour chart. Here's the clear bearish divergence, guys, in case you guys were wondering, could I have predicted that August peak? Actually, yes, you could have. By look at the MACD right here, 4-hour chart, MACD, 4-hour MACD. Clear bearish divergence between the two peaks. And look at that. I mean, that keeps going up. MACD says nope. So the moral of this story is, you actually need 2 humps to confirm a divergence. You can't just look at one hump and say, well, I mean, this is a higher than that, and that's higher than that. That's not divergence, right? You need the next hump, which is clear here. Like, oh, there's some divergence. Okay? Now, I'm going to actually fine-tune the interpretation here. On the right-hand side here is the 1-hour chart. See that? Leading up to the August 16th peak was a pop and float scenario. You could start to see the divergences in the pop and float. See that? Pops up, floats, comes down, tries to come back up, crosses the signal line, comes back down, makes a lower high, comes back up, crosses the signal line again, makes a lower high, comes back down. It's like, uh-oh. That's how you know. There's bearish divergence in the pop and float. Now, I will say there is a distinction between, I would not consider like this high and this high and this high to be bearish divergence. Do you want to know why? Here's why. Because as soon as you cross this, okay, here's the pop up, the move up. Here's the move down. You cross the 0 line. Crossing the 0 line is kind of like restarting the clock. You can't compare this lower high to this lower high because both times, I'll just call them pyramid, both humps crossed the 0 line. So you started, you came up, you popped up, but then you came back down and you crossed the 0 line. You got to reset the clock. You can't say, oh, there's bearish divergence here, right? You can only start to count bearish divergences when it hasn't crossed the zero line yet, like this. See that? Because if you would have called bearish divergence from right here, you would have been like too early, August 4th, right? You're like 10 days early. See what I mean? So if you just started shorting it, oh, right there, you're way too early. Okay? So when it crosses the zero line again, you got to count, it starts over. It's only when you get this pop and float scenario and you start to see bearish divergences here. It's like, oh yeah, the cliff is coming. Problem is you don't know which one of these humps the cliff's going to be. See what I mean? That's the problem. But you see how you can go many, many days still. Like 1, 2, 3, 4, 5 days. See that? So you do have advance notice of where the cliff is, right? Where the peak is. It's got to be in a pop and float scenario for you to start looking at divergences. Now, on the 4 hour, see, look at the 4 hour is so smooth though. It's clear. You can see that. Oh, yeah. That's divergence. That's no question about it. No question. Right? So, okay. So, that is basically one more thing. One last thing I wanted to show you guys. And it was on this first slide. This dashed line that's going down like this, and this dashed line that's going horizontal, I just drew that in like yesterday. Okay? I believe we are now coming to a conclusion of this rising channel here. Here's the channel top here. Here's the channel bottom there. I think this fake rally is going to put a conclusion to that rising channel. Okay? We are not going to be reclaiming. When I say reclaim, I mean busting through it, successfully backtesting it, and then just keep going up. I think this week we can bust through the line, but I don't think we're going to be able to hold the line. Just like this. We busted through the EMA, the red EMA 50. We busted through it, but we couldn't hold it. We couldn't backtest it. Busted through it, couldn't hold it. Couldn't backtest it. See? Both of these red and gray lines all year for all of 2022 has rejected the markets. All year has rejected the markets. It did it in April, March, April. It did it in August, and it did it in December. Okay? We are now below the line. Okay? So, this dash line I drew in yesterday is now where I think the trajectory is. But that trajectory can be modified, again, depending on where we land. As I was talking about earlier, where do we land? On the 4 hour, on these X's, and on the 1 hour, on these X's. Where do we land? That will determine whether we kind of go lower, 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 or if we kind of go sideways for a little bit, right? So that is an open question, okay? So that is basically all I've got for you guys today. Please follow me on Twitter if you'd like more real-time tweets that I tweet out during the daytime. And please give it a like, share, subscribe, or click to be notified when I release something new. And with that, I'm Agent 00 signing off.